Soybeans DayTrader 3 is one of my long-term strategies. It is up on the year. This performance report is with slippage and commission. So 27.75 up on the year, about break even the last 2 years. And it had a sideways equity curve. We put this in the portfolios because we anticipated it would break out this year. It did. It's pulled back some since then. And I've been looking for better ways to trade this. We tested limit orders. Another thing I did was test the sensitivity of the pattern and decrease the sensitivity of the pattern to adjust for more price movement and volatility at the open. So it's a very, very small change. It uses the same exact pattern. And this is what I have. Same strategy with a less sensitive pattern. It takes less trades. You see on this setup right here, there's 1,189 trades. On this one, there's 590. So both of these test back to 2007 with $25 round turn slippage and commission. We've had more slippage lately, and this setup, it improves. You see the average trade profit goes from 43.02 to 69.44, and the drawdown is 37.75, and the net profit as a percentage of drawdown is 10.85, and back here it is 11.02, so about the same, but higher average trade profit. So, and net profit as a percentage of drawdown about the same. So one of the things, there's some other things we can do to improve this strategy, and I'm going to show you those step by step. And I'm still working on this, but may have the release for it soon. Grains DayTrader 3 2022. So a format strategy, and I come in here. I've tested the market order versus limit order. I haven't tested the limit order yet on this version, but I'm going to stay with the market order, and I'm going to change some things. I'm going to take out the break-even stop loss and the fast trailing. So I'm going to just simplify it. I'm just going to kind of have a digital trade here where you have a stop loss, profit target, or end of day exit. No trailing, no break even, no micromanagement of this strategy. So the fast trailing stop loss is turned off. The break even stop loss is turned off. And now let's see what the results of this will be. So you see 69.44, 10.85. Those are the two numbers that I look at the most, and my eyes are drawn to these numbers the quickest. We need the average trade profit. This is with $25 round turn slippage and commission. And also look at this net profit as a percentage of drawdown. Also total net profit and absolute drawdown, which is 37.75. And so if you add 25 back to this, the raw number is $94.44. So we're waiting for this to update here. And when we get the update, I'm going to pause the video. So you see the update here. This goes from 69 to 86. The drawdown goes up to 4,900, and your net profit as a percentage of drawdown goes down a little bit. But I really like this 86.65. Really like that. And you can see the equity curve too. I can't remember if we looked at the equity curve on this without it, but it's about the same. And so really nice performance, and the drawdown is even less since 2013. So the bigger drawdowns are back here. It's a good place to start this one too because it's kind of cooled off. It's had a huge year. This setup would have had a huge year. We're just now researching this new setup. Had a 15,000 in 2008, 97.25, 187.50 the last 12 months. Let's see what else we can do to simplify this setup. And we can come in here and we can take out the profit target. What happens if we take out the profit target? So we can just let that trade. The biggest winning trade would not be 1975. It would be larger. So what can we do to maybe have a bigger average trade profit of bigger than 86 and net profit as a percentage drawdown 1043? So it improves it even more. 86 average trade profit is the same, but the net profit as a percentage drawdown goes up. And our drawdown goes down because we're able to win on bigger trades. 44.3750 is the biggest trade instead of 1975, and that helps us. Our total net profit is still around 50,000. What does the equity curve look like? Nice equity curve going back to 2007. Reason we go back to 2007, market started becoming electronic around 2007. And so that's why we start there. And let's take a look at what else could we do? What else could we potentially do? We are in the process of desensitizing the entry, which we did, a simple loosening of the parameters to take advantage of not so sensitive of markets that wiggle a lot or have a lot of volatility at the open. Just changing a couple of point values by a factor of 1. And so what else could we do? We've desensitized the entry. We've simplified the exit. All we have now is we exit at 350 stop loss or exit at the end of the day. So what if we increase our stop loss, give it a little bit more room? 350 is pretty tight. Let's see what happens. We are going to take a look now, and as this updates, keep in mind average trade profit 86.31, net profit as a percentage of drawdown 1201.77. So here we go. We have a huge boost in average trade profit to $109.95. Net profit as a percentage of drawdown goes down because drawdown goes up. Total net profit goes up, and we have a little bit more volatility. But since 2013, the drawdown has been low. I think it's only around 3,000. I set it to 2013, this time frame right here, and the drawdown, worst case drawdown, is only around 3,000. So if you want a strategy that tests well going back 8 years with only about a $3,000 drawdown, you could use this setup right now once you have it. But it trades a lot less, periodical returns. 11,313, 237.50 over the last 12 months. 78 trades, that's pretty good. 65 this year over 10 months, so about 6.5 trades a month. Let's look at the monthly. It's currently in a drawdown, hasn't done much really since June, and so it could be in for a second leg. October, November, December are some of the stronger averages. March and April are some of the stronger averages. June and July are June, July, March, April, and October. So those are around $700 or more on those months are the strongest months seasonally. So wanted to share this with you. When you develop a strategy, the main thing that you have to do is make sure you don't strangle the strategy with break-even stop losses, trailing stop losses too much. You can do that. You could add those back. There's many different combinations now that we've increased the stop loss. What does it look like when we change when we add things like break-even stop loss back or trailing stop loss or profit target? What happens when that happens? What if we have a monthly stop loss? What if we test the limit order? I could go on and on. We could test a lot of things. My favorite approach, I guess, is if you're going to look at it from 2013, this is my favorite approach right here because the average trade profit, if you're going to look at it all the way back to 2007, using that $350 stop loss gives you a lower stop loss. And so I like the $350 stop loss back to 2007. I like the $500 stop loss if you're only going back to 2013. So that's what I wanted to share, a lesson on strategy development and how we're working on our Soybeans DayTrader III setup.